Hi, I'm Rabil. I'm CEO of Kayne Anderson Capital Advisors and also CEO of Kayne Anderson Real Estate. I've been with Kayne Anderson for 14 and a half years. I co-founded the real estate platform, which currently manages about $13.2 billion of assets under management. We love the future for alternative sectors. The good news and the bad news all wrapped into one is that there will be greater competition, but we welcome that. As I mentioned in a previous answer, the greatest barrier to entry in these asset classes is an operating capability. And Kayne Anderson Real Estate has defined itself and set itself apart as what I call an operator-oriented platform. So we've always believed in operationally intensive asset classes that continued outperformance on a risk-adjusted return basis really requires an operating capability or deep knowledge about the assets that you own. And so that's always been part of our platform, has been to either be directly operating them ourselves or aligned strategically, in many cases on an exclusive basis, with operators who serve as our operating platform. So, in terms of looking forward, we think it's great that more capital wants to come into these asset classes. They are incredibly underinvested globally. So we expect to see a tsunami of capital continuing to flow into medical office, seniors housing, student housing, and self-storage on a going forward basis. And storage has maybe already seen that to some extent, but we expect to see a continued rotation into these verticals. Obviously, in terms of selling fully stabilized core assets, it makes those sales far more efficient. Where we continue to have a strong strategic advantage is that there are very few highly capable operators out there. And so in terms of taking undermanaged assets and transitioning those into fully stabilized core assets, there aren't a great number of players who are in position today to do that. We obviously know that on a going forward basis, as more capital continues to flow into these verticals, that you will see greater operating capabilities, more operators, more efficiencies of scale, and greater competition. That will happen and should happen. And we fully expect that. But we think there is a bright investing future for alternatives. And we think that these sectors are now no longer called niche sectors, given their size and scale and the fact that many people recognize them as very important asset classes. They're simply alternative sectors, and we've invested in them for a long period of time, specifically because they are demographically driven, highly fragmented, and recession resistant, and we don't see those characteristics changing on a going forward basis. Yeah, increasing competition is a reality of these sectors becoming more well known, and we welcome that. So that makes sales of existing assets that are fully leased and fully stabilized far more efficient. Where we tend to play, and the reason that we're very bullish on our own return expectations on a going forward basis, is that there remains a dearth of highly qualified, scalable operators in medical office and seniors housing specifically. And so what Kayne Anderson does is we endeavor to acquire assets that are very high quality in high demand barrier to entry markets, but where we see under management, and bring in our own strategic operators. In many cases, those are exclusive to us, those operators, and really undertake a 24 to 36 month improvement of the asset, not so much in terms of capital expenditure or deferred maintenance, but just improve operating capabilities, which results in higher occupancy, higher rents, and stabilized assets over time. So from a return expectation standpoint, I think it really depends where you're going to play, in what part of the capital stack or where you're looking to invest your capital. from an opportunistic perspective, we haven't changed our return targets or parameters at all over the last 10 years. So those remain 15 to 18% net returns. On a gross return basis, that's closer to 20% plus returns. So we still see that as not only feasible, but that is our expectation, and that's what we've delivered to this point. So I've thought about differentiation in a number of different ways. I will tell you that culture is incredibly important to us, and the people that we have internally and the people that we work with externally are incredibly important to us. So you'll have to pardon my French, but there are four guiding principles upon which I founded or co-founded the real estate platform at Kayne Anderson. The no asshole rule, always do the right thing, life is short, and check your ego at the door. All of which, granted, are cliches, but they're cliches for a reason, and that is there's a lot of truth in them. And unfortunately, I think it's the exception, not the rule, that companies adhere to a culture that really embraces all of those things. And we take that very seriously, and we're very proud of and protective of the culture that we've created, which is really a we, not I culture. And we've got, a mantra internally: one team, one dream. So it's not my deal, it's not your deal, it's our deal. We win together, we lose together. Obviously, we far prefer to win. So I would start with differentiation really being at, creating an environment where people are engaged, love what they do, are psyched to come into work every day, and, obviously get compensated economically, but also get compensated psychically. I mean, we all work way too hard. This is, we look at Kayne Anderson as a family, and this is a family where you spend more time with this family than your own family. And so it's an incredibly important part of your life, and something that, you don't want to be just checking the box or, punching the clock. And so we've really worked hard to create that environment, and quite often that involves difficult decisions. Now, there are obviously other things from a business perspective, in terms of the verticals that we invest in, and other best practices, et cetera. But I think differentiation for us really starts with those key tenets, and with culture, and with having the right people, and with working with the right people, and creating win-win situations internally and externally. And so it's really something that we believe in deeply, and we take relationships, very seriously, and we endeavor to have as close to 100% alignment of interest with everyone with whom we work as possible. If you'd like to learn more about Kayne Anderson, real estate or otherwise, please visit us at kayneanderson.com. We'd love to have you visit us and learn more about us. Thank you.